Anyway, the Dow and S&P 500 both closing at record levels. Let's find out what investors should focus on next. Joining us now is Greg Hahn, President and Chief Investment Officer, Winthrop Capital Management, and David Lebovitz. He is Global Market Strategist, JP Morgan Asset Management. You have a muted response to the whole deal, David. You've been kind of muted for a while, right?
Well, I think that part of the reason that we've been a little bit guarded is because we really didn't get any new information. There were really no new surprises in what was finally signed, sealed, and delivered yesterday. It was very much in the price, and our view was that it was in the price. And so rather than speculating on potential upside stemming from the deal, which obviously didn't materialize, we were just more focused on the fundamentals, 2% growth, what's going on with earnings, what's going on with wages, and what's that impact on margins. And, you know, as we kick off the fourth quarter earnings season here, I think the most important thing to keep an eye on, look, if you look at operating earnings, you're going to see a big bounce back. If you look at pro forma, it's going to be about flat. The big thing that we're looking at is what does guidance look like for 2020? Can companies defend their margins? Can they continue to generate earnings growth? Because I think if the fundamentals begin to wane a bit, you know, that's going to call some of the trajectory of the market into question.
I mean, you weren't thinking we'd do 25, 30% last year, I don't think. Did you?
Well, I thought last year was going to be a good year.
Like what? Purely high single digits or
something? I mean, north of 20, if you just look at the re-rating and multiples into the end of the year, a simple return to where we were before the big sell-off would have given us 20%. Was I surprised that we went all the way up to 30? That caught me a bit off guard. But given the way that the Fed played out and given the way that U.S.-China trade played out, I think that created that additional upside that we were able to capture in.
How's 2020 look for you, Greg?
2020 is going to be a challenge. With the multiple expansion that we saw in 2019, to go further from here, we see about 5% earnings growth in the S&P 500. The current multiple, we're probably at 3,300. In fixed income, we're still using fixed income in our asset allocation, so that's our safety net.
So flat this year then.
We
3289 is where the S&P is. You're expecting 3,300?
We're looking at a market that is fully valued, has fully discounted all of the good news that's out there, and we're putting conservative.
Do you have a price target last year?
Yeah.
What was it last year?
We did it off of a 16 multiple though, so it was lower.
How much lower?
We were down probably 15%. This was a reluctant rally for us. We participated in it, but we're looking at this saying, This doesn't make sense.
And I think that's the big risk this year, right? You look at what's going on in the investment community, and people are skeptical about further progress on trade. They're nervous about what's going to happen with the election. They're nervous about Brexit. I mean, to an extent, if the economy keeps growing, this is the proverbial wall of worry. And, you know, Joe, at the end of last year, we were talking about what's the bigger risk in 2020, a big upside move or a big downside move. And I think you and I actually shook out in similar territory, which is, given all the skepticism we see amongst the investment community, you know, right, perhaps things could end up being better than expected. You're not sort of feeling that again right now?
Every time we interview someone on this show and they say the same stuff, you're not feeling deja vu all over again?
It's a little bit of deja vu, but I mean, that's the way markets work, right?
Let's say the trade deal works. Yep. Let's say you start seeing upside profits in companies like Deere and Caterpillar because heavy equipment's rebounded. Let's say the return of the deal clears the way for CapEx to come back, and you start seeing added flows between the China and the U.S.
Add to that, you see an improved global economy, because we had an analyst earlier
think that's
who
an
picked
excellent point.
ExxonMobil, or I'm sorry, who picked Chevron as a pick because he thinks demand is going to go up as the world economy.
And by extension of that,
my question is, spin the upside, layer in Becky's very important addition here. You get this change in the outlook for global growth.
Yep.
Is your forecast incorporate that, or are you sort of discounting that there is no upside here?
So I think there's upside, and we just use the PMIs as kind of a rough gauge. You know, I think we can get back north of 50 if the global economy starts firing. The point that I would make in addition to what Becky said is, if the global economy gets better, the dollar gets weaker, that's even more of a tailwind for U.S. corporate profits. So, you know, if the global economy begins firing, I think that there is some headroom for profits to move higher than people expect.